Hello investors and welcome back to the channel. I'm Mitali Dhoke here to simplify mutual fund investing and guide you on a smarter wealth creation journey. India's mid-cap space is at a critical juncture. Following a phase of strong outperformance after the pandemic bounce back, several mid-cap stocks have experienced greater volatility in 2025 due to global macro uncertainties, increasing interest rates and sectoral rotations. However, the mid-cap segment still provides great opportunities as the companies tend to balance scalability, growth flexibility, and market resilience often missing in large caps. While small caps are fraught with extreme volatility and large caps could provide moderate growth in a high valuation period, mid caps balance growth and risk and are hence considered a strategic option for long-term wealth generation. Under the prevailing market scenario, where selective growth sectors such as private banking, consumption, and technology related mid caps are gaining traction, investors must look at funds that not only generate returns but also keep risk in check. These measures like standard deviation, Sharpe ratio, and Sortino ratio are now key tools in this analysis. They help to better explain how a fund performs compared to the risk it assumes and provide an understanding of protection against losses, portfolio risk, and consistent return generation. By paying attention to these parameters, investors might steer clear of funds that look appealing based on front page return but might leave them vulnerable to unnecessary volatility or drawdowns. In this context, some mid-cap funds have distinguished themselves with their steady risk-adjusted returns. These funds allow to ride the growth path of mid-cap companies without experiencing the more extreme swings that could be present with smaller cap investments. Our selection of top 3 mid-cap funds is grounded in a data-backed evaluation of 5-year rolling CAGR and key risk metrics such as standard deviation, Sharpe ratio, and Sortino ratio, highlighting schemes that have delivered strong risk-adjusted performance over time. Before we move on, please note this video is for information purpose only. It is not a mutual fund recommendation and should not be considered as such. There is no opinion or view on any scheme covered herein. First is the HDFC Mid-Cap Fund, launched in June 2007, previously known as HDFC Mid-Cap Opportunities Fund, remains among the well-known names in the mid-cap segment. Managed with a research-based, disciplined approach, the fund screens for high-quality, mid-sized companies that may grow into market leaders of the future. Rather than tracking fads or short-term momentum in the market, the fund takes a bottom-up stock-picking philosophy focusing on business fundamentals, management effectiveness, and long-term earnings expansion. During the last 5 years, the fund has yielded a rolling CAGR of approximately 31.15%, highlighting its potential to generate premium risk-adjusted returns. Good numbers like a low SD of 13.68, good Sharpe of 0.42, and Sortino of 0.88 further establish its reliability in rewarding without taking too much risk. As of September 2025, the fund has assets in excess of Rs 848.54 billion, with exposure of about 60 to 70% in mid caps, augmented by selective exposure to large and small caps for liquidity and tactical allowance. Its major holdings include Max Financial Services Limited at 4.76%, Balkrishna Industries Limited at 3.54%, and Indian Bank at 3.26%, representing a blend of cyclical recovery themes and structural growth opportunities. Sector-wise, the allocation is tilted towards automobile and ancillaries 16.33%, banking 13.35%, and healthcare 12.55%. Second is the Nippon India Growth Mid-Cap Fund. This fund is one of the oldest mid-cap funds in India with a robust tradition of beating the market over market cycles. Its inception in October 1995 has seen the scheme navigate various economic cycles, keeping its emphasis on discovering quality mid-sized companies with long-term growth visibility, enhancing profitability, and scalable business models. The investment philosophy of the fund is based on a growth-oriented bottom-up stock-picking strategy in search of businesses that are poised to be future large caps. This strategy enables it to tap the India's growth story through nascent leaders in the industry like industrial manufacturing, financial services, auto components, and consumer discretionary, which continue to pick up momentum in today's economic landscape. In the last 5 years, Nippon India Growth Fund has provided a rolling CAGR of more than 31%, backed by a standard deviation of approximately 15.20 with a Sharpe of 0.37 and Sortino ratio of 0.74 in the mid-cap fund category. As of September 2025, the fund has assets under management of about Rs 339.28 billion, with more than 70% allocation to mid-cap stocks, supplemented by judicious large-cap holdings for absorbing volatility. Notable positions include Fortis Healthcare Limited at 3.33%, BSC Limited at 2.64% and Cholamandalam Financial Holdings Limited 2.55%, which represent a blend of cyclical and secular growth stories. What distinguishes Nippon India Growth Fund is its long-term consistency and resource-driven portfolio construction, enabling it to remain resilient even in turbulent market phases. Third is the Invesco India Midcap Fund, which is renowned for its consistent generation of alpha and rigorous risk management style. The fund aims to invest in mid-sized companies with sustainable competitive advantages, scalable business models, and robust balance sheets, seeking superior returns over the long term with reduced volatility. Unlike several peers which might place concentrated bets, Invesco India Midcap Fund operates on a well-diversified bottom-up style of investment, merging growth and value ideas. This style enables it to spot opportunities across sectors with a thorough emphasis on fundamentals and valuation discipline. In the period of last 5 years, the fund has produced a rolling CAGR of approximately 30.95%. with a modest standard deviation and robust Sharpe ratio, demonstrating its potential to outperform the benchmark on risk-adjusted return basis. The fund's steady compounding has been aided by its selective exposure to high-potential sectors such as financials 21.14%, healthcare 18.34% and retailing 14%. Where mid-sized firms continue to benefit from domestic economic expansion and rising consumption trends. As of September 2025, the fund manages an asset base of approximately Rs 85.18 billion, with over 70% exposure to mid-cap stocks alongside limited allocation to large caps for liquidity and small caps for tactical growth. Key portfolio holdings include Swiggy Limited 5.14%, AU Small Finance Bank 5.9% and L&T Finance 4.9%, representing a thoughtful balance of cyclical and structural growth plays. In an environment where markets are oscillating between optimism and fear, risk-adjusted performance is the real measure of a fund's strength. The mid-cap space continues to present interesting opportunities, but investors must be able to distinguish between funds that deliver high returns by virtue of being aggressively positioned and those that combine growth with stability. The capital in focus here shows that disciplined risk management, quality stock selection, and conviction over the long run could lead to wealth creation without subjecting to excessive volatility. While historical returns are never a certain indicator of future outcomes, a robust risk-adjusted performance history tends to show that the fund manager is adept at taking advantage of shifting market cycles. For investors contemplating exposure to mid-caps in 2025 and beyond, it should not be about chasing top-performing funds but about those that meet one's investment horizon, risk tolerance and financial objectives. So if you found this video helpful, don't forget to hit that like button and share it with your fellow investors. For more expert insights on mutual fund investments, be sure to check out our related videos and articles linked below. And if you are new to the channel, hit subscribe and tap the bell icon so you never miss an update on smart investing strategies. Signing off for now, invest wisely, happy investing. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, enlistment as IA with exchange and certification from NISM is no way guarantee performance of the intermediary or provide an assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.